Without further ado, let me introduce the moderator of this next session, Carmen Durrer, who works also as at the Tax Observatory. Carmen, the floor is yours. Thank you.
Thank you very much. So hello all and welcome to our second panel. I'm Carmen. I'm very happy to be the chair for this session. I'm a PhD candidate at UC Berkeley, and I'm also working on wealth taxation with the EU Tax Observatory. And I'm very happy to introduce today this wonderful panel. We will start the session with Theo Palomo, who will present his work on tax progressivity in Brazil. Theo is a PhD candidate here at the Paris School of Economics and also a colleague at the EU Tax Observatory. Next, we will hear from Lucy Saul, who will present her work on never realized capital gains in Norway. Lucy is a PhD candidate in economics at the University of Chicago Booth School of Business, and she's also on the job market this year. And finally, our third speaker will be Gabriel Zachman. In case you don't know him, Gabriel is a professor of economics here at the Paris School of Economics, at the ENS, and at UC Berkeley as well, all at the same time. And he is also the founding director of the EU Tax Observatory. Today, he will present his work on how much tax the US billionaires pay, which I think is quite the current topic. So each presentation will last 20 to 25 minutes, and then we will have some time for questions from the audience. So without further ado, I will pass the floor on to Theo. Thank you very much.
Expand the screen for the.
Okay, good morning, everyone. I'm very happy to present for the first time the preliminary results of this study here, Tax Progressivity and Inequality in Brazil, Evidence from Integrated Administrative Data. Before starting the presentation, I just want to highlight that this project is a joint collaboration between researchers from the EU Tax Observatory and the Brazilian Tax Authority, Receita Federal Brasileira. And importantly, this work does not necessarily reflect the views of any Brazilian institution. So, as you saw early on in this conference, there's recent studies using very rich administrative data that shows that inequality is higher than we previously thought, and also, in general, the richest are paying much less taxes than the majority of the population. These studies were mainly done for developing countries, as France, the Netherlands, and the US. However, we have very little evidence for global South countries. And probably, as you know, these countries are usually more unequal, they have higher informality rates, and also indirect taxes, consumption taxes, represent a large share of the total tax revenues. So the natural question that arises here is, what is the role of taxation system in shaping the inequalities in these countries? In this paper, we are going to study a key global South country, Brazil. To study Brazil, we are going to leverage very rich administrative data that comes from our partnership with the Brazilian Tax Authority. This includes integrated personal income tax, withholding income tax returns, corporate income tax returns, shareholder registers, and also survey data. This is only possible because Brazil, different from most part of the global South countries, has a very good data infrastructure and high quality data. So, for example, in Brazil, by law, all tax returns are electronically filed. Also, the OECD Digital Governance Index of Brazil is higher than the average of the OECD countries. Another key feature that allows us to do this study in Brazil is the availability of a shareholder register that allows us to link business to their owners. Now, talking more about the context of Brazil. As probably as you know, Brazil is one of the most unequal countries in the world. But however, the tax to GDP ratio of Brazil is very similar to the average of the OECD countries. So the ratio of Brazil is around 33%, and the average of the OECD is 34%. This is way higher than the region, where the Latin American countries has an average of 21.5%. So, in a context of a high unequal country and tax to GDP ratio very similar to developing nations, the important question that arises here is, who pays these taxes? This is also a very hot issue in the country right now because there are some proposals on taxing the richest being discussed at the Congress. So the objective of this paper is to distribute all the national incomes to the individuals. To do that, we are going to use tax data. And here it's important to say, in Brazil, if you receive more than 1.5 minimum wages, you have to declare the personal income tax returns. For the rest of the population, so for the informal sector, for the unemployed people, and for the poor households, we are going to rely on survey data, so PNAD. Well, when you distribute all the national income to the individuals, we can answer very important questions, such as, what is the national income share of the top 1% in Brazil? Is the overall tax system in Brazil regressive or progressive? And how much taxes are paid by the very wealthy individuals in Brazil in terms of their relative income? To answer these questions, we first have to distribute all the profits and taxes paid by firms to their owners. To do that, we are going to construct an 8-level shareholder tree. What is that? This is just a recursive way to assign participation in firms to individuals. For example, here, I'm showing a 3-level shareholder tree. And if you look at the left corner, you can see that this individual has some participation in firm B, and firm B has some participation in firm A. So if you want to infer the participation of this individual in the corner left in firm A, you just need to multiply her participation in firm B by the participation of firm B in firm A. This is what we do in the paper, but instead of just stopping at the 3rd level, we go until the 8th. So now to give you some context about the tax regimes for companies in Brazil, we have 3 main ones. The first one is Simples. Simples mainly encompasses the small firms, and they have to pay a tax under their turnovers. Second, we have the presumptive tax regime. That is basically a regime where firms have to pay a fixed profit rate under their turnover that is defined by sector. And third, we have the real profit tax, which encompasses the biggest firm in Brazil, and this is just a normal tax on the profits of the firms. When you look at the simplest firms, we can assign 100% of their profits to their owners. For the presumptive tax regime, we can assign 82% of their total profits to the owners. And for the real profit tax, we assign 32% of the total profits of these firms to their owners. However, among the shareholders of these companies, there is the government and non-residents. So if we exclude this part, which we cannot directly assign, we in fact are distributing 57% of the total profits of the real profit firms in Brazil to their owners. So overall, our main result is that we can allocate 70% of all the corporate profits in the countries to the respective owners of these companies. Now I'm going to present some preliminary results for 2022. First, what happens when you distribute all these income national accounts to the individuals? First, we see that Brazil is not only one of the most unequal countries in the world, but the inequality in Brazil is biggest than previous estimates. So here I'm comparing our shares of income, so the pre-tax national income shares by income groups. In the gray bar here is our estimates, and in the blue bar is the estimates of a recent study made by researchers from the World Inequality Lab. If you look at the middle 40%, both shares are very similar. So they have around 30% of the total national income. Even when we sum the next 9% plus the top 1%, so the top 10% of the population, they have a very similar share, around 60% of the total national income. However, our study goes much more in details for this, the very rich, because we have access, and we did for the first time, this link between companies and shareholders in Brazil. In the other study, they rely on distributive assumptions. So as you can see here, this matters a lot. So to really link individuals to their company matters a lot, and to distribute the undistributed profits of the firms, the retained earnings, also matters a lot, especially for the top. So as you can see here, the top 1% share in Brazil is 7 percentage points higher than the other studies, which means basically that the top 1% richest in Brazil, they have 1/3 of the total national income of the country. This puts Brazil as one of the most unequal countries in the world. Now I'm showing you in this graph the composition of the income of the top 20%. The top 20% is the population that is declaring the personal income tax. The total income here is defined as the total income declared at the personal income tax plus the undistributed profits that we allocate to the owner of the firms using our shareholder tree. As you can see here, for the groups between 80 to 99, most part of their income is taxable income. So income that is subject to the personal income tax in Brazil. And here's important to notice that the PIT in Brazil is around 27.5%. When you go to the top, one part of the income that increases a lot is the exempt income. So the income that doesn't pay PIT. Also, another very important component, especially for the top, is the undistributed profits. This is the major component if you look at the top 0.001% individuals. When you look at the income subject to the withholding income tax, the share is almost constant all over the distribution, around 10%. Now I'm showing you the same graph, but now I'm open for the main income components. So for example, what is taxable income in Brazil is mainly salaries. And of course, when you go to the top, this part of the salaries over the total income decreased a lot. And you might have asked yourself in the previous slide, what is exempt income in Brazil? Well, this in Brazil is dividends. So different from most part of the countries in the world, dividends are not taxed in Brazil. And of course, they represent a very large share of the income of the richest. When you look at the undistributed profits, we can see that the presumptive regime, so the regime for the middle-sized companies, it increased a lot of its participation in the very rich individuals. But when you go to the real top, the top 0.001%, which in Brazil represents around 1,500 individuals, we can see that the most important component of the undistributed profits is the real profit regime. Because as I told you, that's where the biggest companies are. Now I'm showing the graph of effective tax rate in proportion of the total income by income groups. So I'm using the same concept of total income. So all the income declared in the personal income tax plus the undistributed profits that was assigned to the individuals using our shareholder tree. If you look at the personal income tax, so the blue line, we can see that the personal income tax in Brazil is progressive until we reach the top 1%. And in the top 1%, it falls a lot. The reason for that is that the main income components for these individuals are dividends and undistributed profits that are not taxed by the PIT. When you look at the corporate income tax, one thing that is good to have in mind is that the main regimes of Brazil, so the real profit tax regime and the presumptive tax, they have a nominal tax rate of 34%. 34%. But when you look at the graph there, we can see that the companies, they manage to decrease a lot the taxes paid by decreasing the fiscal profits, using deductions, using tax benefits, and so on. And in the end, the effective tax rate is much lower than the nominal tax rate. So the CIT, the corporate income tax, can compensate a bit the regressivity of the PIT, but you can see that the change in slop is very considerable. Different from most part of the developing countries, in Brazil, and as all the other global south countries, the main tax is consumption taxes. They represent 40.6% of the total tax revenues against, for example, only 22.7% for the income taxes. So, as they are so important, how we allocate them matters a lot. So how we are going to allocate these consumption taxes? First, we are going to use very detailed consumption data that comes from the Consumer Expenditure Survey, POF, 2017-2018. Then we are going to correct for informal consumption, which is basically we are going to exclude the consumption products bought in the informal establishments in Brazil. Then we are going to group these thousands and thousands of products in POF in 127 categories, which is the categories of the input-output matrix. Then we apply the effective consumption tax rates estimated by this study, Silver et al. And with that, we can see the consumption taxes paid by households in Brazil. To link this information from POF to PNAD, we are going to use machine learning to train our model in POF and then predict the consumption paid by families in PNAD. Finally, for the tax data observations, you just apply the effective consumption tax to them. So, when you distribute all the incomes of national accounts and all the taxes paid, we get to this graph here, which is one of the main graphs in our study. As you can see here, for most part of the population, the effective tax rate is around 45–50%. But this is not true for the top 1%. The top 1% have a much lower effective tax rate. This is 20 percentage points lower than the rest of the population. This means, basically, that the top 1%, the group that has 1/3 of the total national income, they're paying much less taxes than the rest of the population. When you look at the bottom, the main tax here is consumption taxes. And this is because these families, they consume most part of their income. And as I told you before, the consumption tax are the main tax in Brazil in terms of total revenues. When you go more to the top, consumption taxes are not that important because the propensity to consume are lower, so there are more savings. So by definition, this consumption decrease. And as you can see here, the main tax for these very rich individuals is the corporate income tax. However, as I told you before, the corporate income tax rates are way lower than the nominal tax rates. So this explains this regressive behavior, which leads to the conclusion about this graph, that is, Brazil has a very regressive tax system that just increased the inequality of the country. So to conclude here, in our paper, we studied a key global south country, Brazil. We leverage very rich data and shareholder register coming from our partnership with the tax authority in Brazil. And our results are inequality in the country is way higher than previous estimate measure and puts Brazil as one of the most unequal countries in the world. The top 1% in Brazil, that concentrates 1/3 of the total national income, they also pay much less taxes. And to conclude, we have a very regressive tax system that just exacerbates inequality that is already very high. Thank you very much for your attention.